Hey everyone, and welcome back to The Explainer. Today, we're diving headfirst into the complex, seriously high-stakes world of modern financial accountability. We're going way beyond your standard run-of-the-mill numbers game here to uncover how the biggest, most complicated risks in the corporate world are actually kept in check. It's going to be a wild ride, so let's get into it.
So let me ask you this right off the bat. What exactly happens when a standard audit just isn't enough? Out in the wild, the predictable procedures you'd use to check the books for a local retail store, they simply can't handle the specialized, massive threats of global industries. The landscape is just too vast, and honestly, the risks are buried way too deep. We're going to need a completely different set of tools.
Okay, let's dive right into our tactical briefing for Chapter 5, Specialized Audits and Related Services. We're going to cover specialized industries, then move on to review engagements, other assurance, related services, and finally, we'll wrap up by tackling some major emerging issues.
Now let's contrast these two very different worlds for a second. On one hand, you've got the relatively safe, predictable world of normal trading companies. An auditor there is mainly focusing on tangible things, right? Like sales invoices or literally counting boxes of physical stock. But on the other side, wow, that's where things get incredibly complex. Specialized industries require an auditor to wrap their heads around super intricate regulations, massive, sprawling digital systems, and totally unique types of evidence. You just absolutely cannot use the same simple playbook for both situations.
Which brings us to Part 1, Navigating High-Stakes Industries.
So, let's talk about banking. This is a massive, high-risk zone where literally millions of dollars in invisible digital money are moving every single second. An auditor here has to pivot super fast from just understanding the bank's core products to actively investigating severe threats like credit risks and loan impairments. I mean, think about it. If thousands of borrowers suddenly can't repay their loans, the bank's assets could be vastly overstated on paper. It takes extremely strict regulatory compliance, plus some really deep dives into complex IT systems, just to ensure that money is actually there.
And this brilliantly illustrates the flip side when we look at the insurance battlefield. Over here, threats aren't just about what happened in the past. We are dealing with future uncertainties. Think about how an insurance company works. They collect cash from you today, but they might not actually pay out a claim for, say, 10 years down the line. So the auditor's focus totally shifts. They have to rely on really rigorous claims investigations and incredibly complex actuarial estimates. Why? To guarantee the company actually has enough cash reserves tucked away to survive a massive future disaster.
But hey, it's not just banks and insurance companies that are volatile out there. Take the construction industry, for example. Auditors there have to verify incredibly complex contract revenue over months, sometimes even years of a project's progress. Or think about hotels. They are tracking massive daily cash volumes across huge interconnected online booking systems. And then you have nonprofits. They require highly specialized audits too, mainly to ensure strict stewardship over exactly how every single dollar of grant money is being spent. Honestly, every single industry brings its own completely unique set of headaches.
All right, let's shift gears to Part 2, the assurance spectrum, beyond standard audits.
Now, what's really interesting about this is the difference in confidence levels an auditor can actually provide. First, you've got reasonable assurance. This requires deep, hard evidence. This is your classic full-blown audit. But then you have limited assurance. This is used in what we call review engagements. It relies mostly on just asking the right questions, which we call inquiry, and performing some analytical procedures. Now, it definitely provides meaningful comfort to the people using the financial statements, but make no mistake, it's a completely different tool in the tool belt.
So let's break these operational protocols down a bit more clearly. An audit, that gives you reasonable assurance along with a positive opinion. A review, that drops down to limited assurance. But then you have agreed upon procedures, or AUPs, and compilations. Get this, they provide absolutely zero assurance, none. The output strictly matches the specific engagement that was performed. And this is absolutely crucial because it ensures that users aren't out there making massive million-dollar financial decisions based on a false sense of confidence.
Moving right along to Part 3, No Assurance Provided, the Fact Finders.
And that brings us to the agreed-upon procedures, or AUP engagement. Basically, in these scenarios, the auditor holsters their opinion and acts strictly as an investigator. Imagine a government sponsor wants to know if a specific flood relief grant was actually used correctly. Well, they don't really need a massive, expensive financial audit of the entire charity, right? Instead, the practitioner and the client sit down and agree on rigid, super specific investigative tactics. It's like saying, hey,
We are going to check exactly 30 specific grant payment invoices. Nothing more, nothing less.
So the crucial point here is the strict sequence of events. Step 1, you agree on the procedures. Step 2, you perform exactly those procedures. Step 3, you record the results. And Step 4, you report the findings. The practitioner might simply hand over a report that says, hey, 2 of the 30 invoices we checked were missing. That's it. They don't give any sort of broad opinion on the charity's overall health. They just hand over the factual, unadulterated findings and leave the final judgment completely up to the user. It is incredibly targeted and super efficient.
Now, for Part 4, the future of auditing, the evolving threat.
Let's move to this next concept and see how this all builds up. We're dropping right onto the cutting edge now, dealing with some serious high-impact tech threats. The whole business landscape is just shifting so rapidly beneath the auditor's feet. I mean, the world is fully moved on to AI data analysis, remote cloud accounting, and this massive new demand for ESG. That's environmental, social, and governance reporting. Nowadays, a computer-generated report is no longer just automatically trusted. The auditor actually has to go in and figure out exactly how that digital data was created, how it was processed, and how securely it's being protected.
Just think about the specific cybersecurity vulnerabilities threatening financial data today. It's wild. Imagine what would happen to a global supply chain if a ransomware attack completely encrypted a massive company's financial ledger. Total chaos, right? If a company has weak IT controls, literally a single simple phishing scam could allow a bad actor to alter or destroy massive amounts of critical accounting records. The digital vault absolutely has to be as secure as the old physical ones used to be, and auditors are the ones who have to test that perimeter.
So, how exactly does the auditor fight back against all of this? Well, they deploy a very structured countermeasure framework. First things first, they have to deeply understand the new digital system. Then, they assess the specific cyber or data threat at hand. After that, they rigorously test the company's controls. And look, if the tech is just way too advanced, they don't guess. They bring in the heavy hitters, deploying specialized IT, cybersecurity, or even actuarial experts just to guarantee the integrity of that data.
But despite all of this incredible cutting-edge technology, it really all comes back to the human element. I absolutely love this point. Emerging issues do not remove the need for professional judgment. In fact, judgment becomes more important. Actually, scratch that, it becomes vital. Because whether you're dealing with weird AI anomalies or vast, endless cloud-based data sets, the ultimate weapon for financial security remains human professional judgment and unwavering ethics. The machine can flag an anomaly, sure, but only the human auditor can actually uncover the truth.
Which leaves us with this final kind of provocative thought to wrap things up. In a world full of complex algorithms, deep fakes, and digital illusions, do you trust the machine or do you trust the auditor's judgment? It's something you should really think about the next time you're looking at a company's financial report. Anyway, thank you so much for joining me on this explainer today. And remember, always keep questioning the numbers behind the curtain.